Thank you so much for joining me today. As always, I appreciate your support. Please give this video a thumbs up if you enjoyed it, and consider subscribing to stay updated on our latest investment insights. And hey, drop a comment below. I love reading what you have to say. Nvidia is undoubtedly one of the most fascinating companies in the world today. The artificial intelligence revolution is reshaping industries and fueling innovation at an unprecedented pace. Amidst this transformative shift, one name stands out as a trailblazer: Nvidia. This technology giant has captivated the attention of investors and industry experts alike. But amidst the excitement and anticipation surrounding this company, there is one pressing question on everyone's lips. Is Nvidia still a buy? In this comprehensive analysis, we delve deep into the financial performance of Nvidia, examining the numbers that reveal the true essence of this dynamic company. Our goal is clear: to help you make informed investment decisions by cutting through the hype and uncovering the real story behind NVIDIA's remarkable journey. Join us as we explore the key metrics, growth prospects, challenges, and opportunities that will shape Nvidia's future and determine whether it still holds promise for potential investors. So buckle up and get ready for an insightful deep dive into the world of Nvidia as we uncover the truth behind its performance, potential, and yes, whether it's still a buy. Let's start. Nvidia Corporation, often stylized as NVDA, is an American multinational technology company that designs and manufactures processor-based systems on a chip primarily for the gaming and automotive markets. Additionally, the company provides services and software. In May 2020, the company was added to the S&P 500 index. As of February 2023, Nvidia is ranked as the sixth largest American company by total revenue. Founded in 1999, the company is headquartered in Santa Clara, California. Let's get acquainted with its latest earnings report. The big picture: NVIDIA's quarterly earnings report reveals impressive progress. Revenue has surged to $46.7 billion, marking a 56% increase year over year and a 6% rise from the previous quarter. Net income has also shown remarkable growth, reaching $26.4 billion, 59% surge year over year. On a diluted basis, earnings per share stand at $1.05, surpassing estimates of $1.01. The gross margin remains robust at 72.7%, showcasing the company's strong pricing power despite increasing competition. Data center revenue continues to lead the way, reaching $41.1 billion, a 56% year-over-year increase driven by sustained demand for AI infrastructure. For the third quarter of fiscal 2026, Nvidia anticipates revenue to be around $54 billion, representing a 2% increase from the previous quarter. Notably, the company expects sequential growth in gaming and professional visualization, balanced by typical seasonality in the data center. Now, let's dig deeper into the details. Jensen Huang, Nvidia's founder and CEO, expressed confidence in the company's momentum. He highlighted that the Blackwell AI platform is ramping up production at full speed, and demand remains extraordinary, particularly in data centers. Huang emphasized that customers continue to expand their deployments of Nvidia's AI infrastructure across hyperscalers like Microsoft, Google, Amazon, and Meta, as well as large enterprises and startups. Despite the challenging macroeconomic environment, he noted that customers are prioritizing AI investments. The automotive business is progressing well, with momentum building towards volume production in the coming quarters. In terms of financials, analysts were impressed with NVIDIA's performance. David Toller, from RBC Capital Markets, highlighted that the company continues to execute extremely well in a tough environment. He praised Nvidia's ability to maintain strong gross margins, improve operating leverage, and deliver impressive cash flow. Kevin Cassidy from TD Cowen echoed these sentiments, emphasizing the strength of NVIDIA's execution and the resilience of its gross margins. Cassidy also recognized the company's impressive growth rates. Despite the stock's run-up this year, Wedbush analyst Dan Ives remains positive, noting that the AI revolution is still in its early innings and Nvidia is well-positioned to benefit. He believes the stock is worth considering for long-term investors. However, not all analysts are as optimistic. Tosha Hari from Goldman Sachs has a neutral rating on the stock and lowered his price target from $600 to $500, citing concerns about competition in the data center GPU market. Nevertheless, the consensus among Wall Street analysts remains positive. Out of 41 ratings, 27 are buys, 11 are holds, and 3 are sells, according to Bloomberg data. The average price target is $643, which represents a 7.5 upside potential. Let's delve deeper into the specifics of NVIDIA's performance. Revenue-wise, the company saw strong growth across all segments compared to the previous quarter. Gaming revenue increased 4% to $3.9 billion, driven by higher sales of AD board partners. Professional visualization revenue grew 7% to $724 million, mainly due to higher notebook GPU sales. Data center revenue rose 6% to $4.1 billion, attributed to strong demand for cloud and large language model deployments. Automotive revenue remained flat at $334 million due to supply constraints on components such as sensors and cameras. On the expenses side, cost of revenue increased 53% to $12.5 billion, primarily due to higher product costs associated with manufacturing GPUs for AI training and inference. Gross profit as a percentage of revenue stood at 72.7%, slightly lower than the 72.9% in the previous quarter. Operating expenses increased 31% to $2.9 billion, mainly due to higher sales, general and administrative expenses, research and development costs. Operating income increased 57% to $21.3 billion. The interest expense rose significantly to $422 million due to the increased interest rates and higher debt levels from the ARM acquisition financing. The income tax provision increased to $3.4 billion, resulting in a net income of $14.5 billion, a 59% increase compared to the previous year. Diluted earnings per share came in at $1.05, beating estimates of $1.01. Looking ahead, the outlook for the third quarter remains positive. Management expects revenue of around $54 billion, plus or minus 2%, representing a sequential increase of 13.8%. Analysts generally have a positive outlook for Nvidia. Among the leading firms covering the stock, JP Morgan, Morgan Stanley, Bank of America, Wells Fargo, Deutsche Bank, and Credit Suisse reiterate their bullish stance with price targets ranging from $630 to $700. Wedbush maintains an outperform rating with a price target of $700, while Citigroup reiterates its buy rating and raises the price target from $600 to $650. Loop Capital maintains a buy rating and sets a price target of $625. However, there are differing opinions. Goldman Sachs maintains a neutral rating with a lowered price target of $500, while KeyBank reduces its price target from $640 to $600, while maintaining a sector weight rating. So what does all this financial jargon really mean for everyday investors like you and me? Let's translate these numbers into plain English. In simple terms, Nvidia is firing on all cylinders. Their revenue is skyrocketing, their profits are soaring, and their margins are impressive, indicating that they're not only selling a ton of chips, but also commanding premium prices. Even better, they're doing all this while maintaining a healthy balance sheet. They're not saddled with debt, and they're returning a fortune to shareholders through buybacks and dividends. If you zoom out and take a longer perspective, NVIDIA's growth story is nothing short of spectacular. They've been riding the wave of artificial intelligence and emerging technologies, and the results speak for themselves. The company's valuation is indeed elevated, but when you consider the growth story and market position, it's easy to understand why investors are willing to pay a premium. The future looks bright for Nvidia. They're well positioned to capitalize on the burgeoning AI market, and their financials give investors confidence in the company's trajectory. Whether you already own Nvidia stock or are considering buying in, the numbers presented in their latest earnings report are a reassuring sign that you read part of a company that's not only navigating the market well, but thriving in it. Remember, investing involves risks, and past performance is not indicative of future results. Conduct thorough research or consult with a financial advisor before making any investment decisions. If you found this breakdown helpful, hit like, subscribe, and let me know in the comments. What do you think? Is NVDA still a buy for you, or are you waiting for a pullback? Thanks for watching, And until next time, happy investing.